From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 4th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Today's news calendar for the U.S. trading session is relatively quiet, but we do have some events this week that could spur on some movement, and you'll want to make note of those on your financial calendars. Last week, we saw a couple of significant things. We saw the Fed chair come out with some dovish comments that caused the market to sell off of the U.S. dollar. And then towards the end of the week, when non-farm payrolls and jobs information for the U.S. was almost contradictory to what the Fed chair had to say. We had jobs creation, we had a raise in earnings, so it really was contradictory to what the Fed chair, the dovish comments that the Fed chair had to say. So we didn't see a continuation of the sell-off. In fact, we saw a little bit of a pullback for the dollar there on Friday at the end of the week because of those good data that did come out. As we look here on the U.S. Franc, we've been studying in the live trade room this downward falling trend channel, if you will, between the two red trend lines. The rising blue trend lines, the first two on the left, show us the rally within the channel. We saw the fall, the rally, the fall, the rally, the fall, and now we're at the bottom of that channel again. Again, we had the dovish comments from the Fed caused it to go down towards the bottom of the channel. Positive news on Friday now has caused the market to stall out at the very bottom and even bounce off of the bottom a little bit. The question, of course, is, are we going to see the rebound? Are we going to see it do what it's been doing for the past several months, bounce off the bottom of the channel, maybe even make its way back up towards the top, which is back up towards the parity level at the top of the trend channel? So that's some of the things that we're working with here at the very beginning of the week. Now, if you're going to sell it based on the pattern of the trends that we've been in over the past 2-3 weeks, then you want to wait for it to go up into resistance to sell it. Let's zoom it in here a little bit on the daily time frame. Take a look at the past couple of weeks here. From the last high, I guess I should say. From the last high, this was the ECB candle several weeks ago. It took a fall for 4 or 5 days, started rallying higher into resistance. Then we had some comments from the FOMC, made a fall. Then it rallied back up into a resistance level. Then we had the Fed chair with the dovish comments, and it took a fall. And now we're back down in support. So again, if you keep with this pattern, you would wait for it to go up before it goes down. That's really always the best idea anyways. You want it to go up to a higher level before you would sell it. And I think that would be closer, at least at minimum, towards 96.50, 96.70, the blue shaded area that you see there, which of course represents your last area of support. So in keeping with the pattern, if you're going to go short, you want it to go up, probably into the mid to upper 96s before you would think about it. So it needs to go up 50, 60, 70 pips before you would think about going short. Obviously, right now, going short at the bottom just doesn't make a logical sense. For 30 days now, we have found support down here into the upper 9,500. So don't go short right now. Just doesn't make a lot of logical sense. We would need it to break down through that support before you would even consider going short right now. 4-hour time frame doesn't change any of that attitude about the market. Let me get it zoomed out here. Doesn't change any of that attitude. You don't want to go short sitting on top of this green zone. Just doesn't make sense. You want it to go up towards the blue zone before you would go short. In fact, while it sits on top of this green zone, may produce us an opportunity to go long, looking for the continuation of positive news that we started with on Friday. We had the good NFP, we had a raise of earnings, so again, that would cause this to go up. We know that fundamentally the Swiss franc is a weaker currency, and so fundamentally it makes sense for this currency pair to go up. The only reason it's been going down is because the Fed keeps coming out with negative comments. So we definitely want to watch for those opportunities. I think a dip back down here to 95.85, 95.75 could even give us an opportunity to go long, looking for the turn higher in keeping with the pattern of the trend the franc's been on for the past few weeks. Moving over to the euro, just the opposite of that. In fact, let's go out here to the weekly real quick. We see that trend channel, the red box down there at the bottom of the chart, or range, I should say, maybe, down here at the bottom of the chart. Most importantly, that's been in that range. The currency pair has been in that range inside that red box for over a year now, back to December and January of 2015. January of 2015, we got inside here, and we've been rattling around in there since then. Why is that important? Back to the daily, we're at the very top of it. So I've pointed out many times in the trade room over the past few weeks, 1, 2, 3, 4, 5, and now the sixth time challenging the top of this 114 and bouncing around and going back down. There's only been one instance where we had a significant push outside that range right here. So probability tells us that out of 1, 2, 3, 4, 5, 6, 7 times, only one time went all the way to this pink zone. Probability tells us that as long as it's underneath there, you don't want to go long because there's a good chance it finds resistance and bounces back down again. So the probability here is for resistance rather than breakout and continuation. Let's take it and zoom it in a little bit. Again, similar pattern to the Frank. Rise, fall, rise, fall, rise. The question is, are we in the fall phase? If so, we would be looking for selling on rallies into resistance. And again, that's just the opposite of the Frank. As it's sitting here into the green shaded area, that's 113.75 to 114, it's more likely that you're looking to go short to target back down to the next support, which is the orange shaded area. That's the pattern anyways. Rise, fall, rise, fall, rise. The question is, are we in the fall phase? If so, we'd want to sell it under the green zone. The only reason we would think about going long, either it goes all the way back down or it finally breaks through that 114 level, and it hasn't done that yet here on the euro dollar. Moving on to the GBP USD, bouncing around. It's in, I think, congestion right now. It's bouncing around, finding support, finding resistance. The black box shows us that. Rise, fall, rise, fall, rise, fall. So we're contracting. We're getting into congestion. If you take just a trend line here, you see the falling red trend line here. We see a rising red trend line here. So we're in contraction. We see lower highs, higher lows. We're going to need a breakout at some point before we can have confidence in this currency pair. A break above the blue zone, likely going higher. Break below. Well, we'll look at the pink zone at the bottom of the black box as our break point to go lower. So I think we need a breakout. Until then, we're likely looking at resistance here at the blue zone. Support somewhere down around the bottom here, somewhere the green or the orange shade area, which we're seeing right now anyways. So we're looking at resistance, support. We need a breakout of one of those two to go either higher or lower. Fundamentally speaking, I think it's kind of a neutral pair. We have the US dollar, the British pound kind of bouncing back and forth. So I don't think fundamentally we can go either direction here for this currency pair. I think we have to wait for a breakout before we can look for a good trend to go. So that being said, as long as we're in this contracting pattern, buy the bottom, sell the top, I think could become an opportunity for us here on the GBP USD. 4-hour time frame. Again, we can see that being reflected even today. We saw the fall, now starting to go back up. If it gets above 42.60, 42.65, the green shaded area, for the day today, we might look for some further movement higher, back up towards the blue shaded area is a possibility. Just be cautious on this currency pair if you're going to be trading the pound dollar. Moving on over to the US CAD, black box at the very bottom. And it's kind of hard to see it a little bit here, but there is a black box right here. We've been in the downward trend pattern, but over the past few days, we've seen a little bit of a bounce back up for the US CAD. We saw the false breakout last week. We spoke a lot about the false breakout, 129.20 down here at the pink zone, the horizontal red line. Spoke a lot about the false breakout in the live trade room last week, and so far that's proven to be true. Zoom it in a little bit here on the daily. There's the false breakout. We went back higher. We came back down. Obviously, the blue shaded area holding resistance, pink shaded area holding support. If you were going to buy this currency pair, I think you want to buy it closer towards the pink shaded area this week at some point, because you know what the risk is, right? The risk is a break underneath that range, a break lower here for the US CAD. So the risk here, if you buy the pink zone, is that it breaks underneath 2920, 2900 and goes lower. Selling this currency pair, if you're going to consider a sell or short on this pair, which is a good possibility since it's in a downtrend, at least right now, if 13,050, 13,085, the blue shaded area is holding as your resistance, could be an opportunity that you're looking for. 4-hour time frame doesn't change any of that really a whole lot. It just gets us a little bit of a zoomed in view. I'm just trying to pull that pink zone over a little bit before I zoom it out. Obviously the blue zone's holding resistance, so if you're going to go short, you're probably at your very best opportunity to do that today. Really just don't want it to break above 30.85 or even 3100 if you're going to go short. Target back down to the blue zone if you're going to go short here on the US CAD. Moving on over to the US yen. We're in a range. We saw last week, of course, a little bit of a pullback again. We saw it push back under our green zone, 112. We're back down towards the support lows. Look at this. 1, 2, 3, and now the fourth time touching down here into the low 111. So as long as it's sitting on top of the blue zone at the bottom, as long as it's above the bottom of our range, I'm very discouraged about going short. I don't want to go short here because 1, 2, 3, and now the fourth time has found support here. To go short, it would have to break through that barrier, that break in the wall, I guess you would say. So not really a great time to go short. In fact, I think it's much better time to look for support and reversal because probability tells us that this is support and it's not breaking through it right now. And there's no real reason to believe today it will because there's no significant news on the calendar. 4-hour time frame gives us just a zoomed in view of that blue shaded area there at the very bottom of the chart. Again, probability tells us that there's no reason to expect it to go short from this blue shaded area. So I think as long as it sits on there, 111.30, 11100, you're looking for a buy scenario just like we did back here. You target back to the green shaded area at your minimum first target, if not higher. I mean, last week we saw it go up, settle down, go up, settle out, and even push a little bit above it. So I think the green zone is your first target. Maybe the orange or even the yellow shaded area become your second or third targets on the way back up. But that means you're buying the blue shaded area. The risk, of course, is a breakdown of the blue zone, and there's risk in every scenario. Moving on over to the AUD/USD, we've seen it in an uptrend. We found resistance last week, and we're still finding resistance here for this pair. So daily time frame, red trend line, blue trend line shows us we're in an uptrend. But look at this up here at the very top. Let's zoom it in one time. We found resistance at the green zone, fall back to the orange zone. Resistance at the green zone. 1, 2, 3, 4 days now finding resistance there. As long as it's underneath that green shaded area at the very top of the chart, and we'll call that 76, 75, 7700. I'd be discouraged about going long underneath that green shaded area because it's found resistance there, and there's no reason to believe that that is going to change. The pink zone, of course, is clearly your support. That is right around the 7600 level. We'll just call it that. Anything underneath 7580, which is the bottom of that pink zone, we could be looking for some further reversal, even back down here towards the mid to upper 7400s, the orange shaded area, all the way back down here towards the red trend line. So we know where our three decision points are, if you will. The green zone's resistance, pink zone's kind of that hinge point, if you will, but support right now. Beyond that, we look forward to go back down here towards the orange zone. And that's pretty much the price action over the past several weeks, isn't it? Resistance, support, resistance, support, resistance, support. So now we need some decision out of the Australian dollar. If it finds support, we go back to the green zone. A break above the green zone, a continuation of the uptrend. Breakdown of the pink zone, we're back down here towards the orange zone. Take it down to the 4-hour time frame. Look at that, a lot of noise happening here. If you're going to go long, if you're going to buy the long-term trend, at least get as close as possible to the pink shaded area, 7600, to go long. That way you minimize and reduce your amount of risk on the trade. You maximize your potential profit back towards the green shaded area if you're going to go long. If you're going to go short, I think you probably want to wait for it to at least touch back up here towards 76, 75 or break down through the pink zone before you go short. So I think you have your marching orders there. Sell the green zone, buy the pink zone. A breakout above the green zone goes higher, break below the pink zone goes lower. Those are the risk scenarios in this currency pair this week. Taking on over to the NZD/USD. Let's take a look at that long-term range that we've been in. We're going back to September of 2015. Resistance red circle, resistance blue box, resistance green circle. I think we're still have the possibility to stay in the range. Fundamentally speaking, let's speak about that first. We know that the New Zealand dollar, the Kiwi, is a weaker currency pair. We know there's potential for U.S. strength. So if that all of that tells us that this should be fundamentally going down. But the only reason we saw it spike above our range last week was the comments, the rumor started by the Fed last week, the dovish comments by the Fed. And again, the data didn't support that on Friday. So fundamentally, it makes more sense for this to go down than up. So it's interesting that we did see last week an attempt to break out the top of the range. Could be the false breakout. Actually, let's take it out here to the weekly time frame. And I want to point it out like this. Take a look. There's the same black box. Same black box we were just looking at on the daily. The range here. Take a look. False breakout, and now we see a false breakout here. It attempted, we didn't stay above it, now we're back inside of it. So I'm not real confident on that breakout right now because of this this weekly time frame look at it. We saw an attempt, no real breakout. My definition of a breakout is an open and close of a singular candle body. Did not do that here on the weekly. So I think anything underneath 68.40, 68.50, underneath that blue zone, could be the beginning phases of the reversal once again here for this to go back down. Daily time frame, of course, we did see a couple of days above there, but again, so far it hasn't produced anything significant here for this pair. So once again, underneath the blue shaded area may give us a clue that we're starting to look for some reversal here once again, because fundamentally we know that it is a bearish currency pair. We saw the rally, the fall, the rally, the fall, the rally. Now are we in the fall phase again? Just look at that. Here's the rally in the fall. Here's the rally in the fall. Now, are we in that phase again? Very similar to what we were kind of looking at on the euro and the franc, isn't it? So, if that's the case, pushing under the blue zone could give us that next phase of the fall, breaking support. Looks for it to go down to the next support, which is down here towards the pink zone. I don't think, at least at this point, I'm ready to call this a buy currency pair yet for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.